Most traders blow up their account for one simple reason. They want to get rich quick. It's all about speed. It's about making as much money as fast as humanly possible. It doesn't end well. And a lot of people come in and say, well, trading doesn't work. Well, of course, trading doesn't work if you do that. Think about it this way. Does anything in life work if you're trying to get rich quick? No, of course it doesn't. I started by doing this because I wanted to make money on my own terms. I only had $500 at the time, and I wanted to grow it to $10,000, and I didn't want to listen to some boss. So if you have $500 and you have a full-time job and you're wondering, is this even humanly possible for me to do? The answer is yes. I did it before. I have so many people in my community that have done it before. It is possible. But you have to take the right approach. It's not about getting rich quick. It's about a structured system that is repeatable for a very long period of time. So I'm going to give you the blueprint here. You have something that I didn't have. I didn't have a guide to go off of. I just kind of figured it out. You have a guide. You have a blueprint. I'm going to show you that in this video. So if you have $500, I'm going to show you how to grow it to $5,000 to $10,000 without chasing stocks. Let's get into it. So when I was 14 years old, I was sitting in the computer lab at my high school. I was a freshman in high school, and they put a stock market game in front of us, and we got $100,000, $1 million, I don't know what it was, to go and trade stocks. And everybody, of course, went out and just bought their favorite stocks, bought their favorite companies, and everybody's account pretty much went down to zero. I went at it a little bit differently, and I said, well, there's these charts here, so these charts have to mean something. You can't just buy a company because you think it's going to go up. That's just not how common sense works, even though that's what people think on YouTube. I bought Coca-Cola. That was my first one, and this was 21 years ago. And it started growing and growing and growing, and I ended up actually making money in this fake account. So I went home to my dad and I said, hey, can I have some money? Can I have $500? He gave it to me. I went back after I turned that 500 into 1,000. I said, Dad, can I have some more money? He said, absolutely not. And that's when I went and got a job, my first job ever at a golf course. I realized quickly that I didn't want to work for somebody. I just wanted to do my own thing. But I worked there to supplement the trading. I wanted to put money in that trading account. And that is when I decided this is what I am going to do. It wasn't necessarily to survive. It wasn't to go and buy flashy things. Remember, I was 14 years old. But I wanted to just have that independence. And I realized I could just sit there on the computer and make money. There's something to this. Fast forward to college. I was still trading. And at that point, I knew that I wanted to go to medical school. I needed to pay for medical school. So I just continued to trade. And that's what actually funded the medical school for 2 years. And then I dropped out because the healthcare system is totally bogus. But the point is, I was able to go from having a very small account to the point of paying $40,000 a year for medical school. This is very possible to do. This is not a one-off story. I promise you that. Now, when I was in college, obviously, I didn't have a ton of time to do this, and that is when I discovered the long-term trading strategy. This is perfect for those of you that have a job, have families, have limited time. All of you've probably heard this a lot. You need to sit there and you need to sweat and you need to grind on your computer. That is not the case. You can spend as little as 5 to 10 minutes a day, and you can do very, very well in trading. That is exactly what I do today. Outside of videos, outside of community live streams, etc., I don't really check my charts because I don't need to. It's all part of the strategy. So if you're a busy mom, dad, you're a college student, you're working 2 jobs, whatever it is, you do have the time to do this. The practice is going to take some time, but after that, you do not need to sit there and grind on your computer. Now we're starting with $500. Now, I'm not trying to turn 500 into 1,000 overnight. That's not it. That's not what this is about. This is a skill that you're learning right now, and you're learning it to do for many, many, many years to come. If you go out there and you watch channels that say, I turned $5,000 and I turned $500 into $10,000 in 2 weeks, that is a scam. Maybe they did. It's not repeatable though. That's the problem. This is not about hitting home runs. This is not about hitting grand slams. This is about small wins that compound over time. You're trying to grow that snowball from here to just get bigger and bigger and bigger. And it is possible. The 1% wins every day, if you're a day trader, go a very, very, very long way. So that's enough about me talking about that. Now the question is, how do we actually do it? Let's come over to a chart and let's look at the 3 major components that I look for. There's 3 things that I look for when I open every single chart. Number 1 is the trend. Number 2 is the volume. And number 3 is the candlestick. So if we come down here to the bottom, this is a daily chart. This is your trend. What does the trend tell you? The trend tells you the direction that the stock is going, where the money is going. Are people buying the stock? Are people going short on the stock? Is the stock going up? Is the stock going down? Is the stock going sideways in a consolidation channel? That is what the trend tells you. The trend is your friend. If you trust the trend over 20 years, you're going to do extremely well. But you have to say, okay, when this thing comes into the sweet spot, and the sweet spot is the area where you have the highest probability to make money. This is 32% here. This is 80% here. Don't necessarily worry about 30 and 82. Just know that in this area, you have the highest probability to make money. And you can see from what we're looking at with Disney right now, our trend is it's making its trajectory into that sweet spot area. So I'm not making a trade on Disney right now, but if it gets into this sweet spot area, it's a pretty good indication that I'm going to make a trade. Now, what's the second thing that we look for? The second thing is the volume. That's these bars right here. This yellow line is the average volume, or the average number of shares traded over the last 30 days in Disney. Why is that important? It's important because volume is like gasoline to a car. It's like people pushing a boulder up a hill. Think about it this way. You have a boulder, massive boulder, and you're standing at the bottom of a hill, and you need to push this thing from point A to point B. Is it easy to do by yourself? Well, of course it's not. But if you have 2 people, is it easier? Yes. If you have 10 people, is it easier? Even easier. If you have 100 people, is it even easier? Yes. It's the same thing as a stock. If you're trying to push a stock through this purple line here, which is the 25-day moving average, the average price of the stock over the last 25 days, it's a resistance point. Stocks don't want to go through those levels. They also don't want to come back down through them. And that is exactly where we're at right now with Disney. So if we get more volume, if we get more people pushing the boulder up the hill, more people buying the stock, what's going to happen? You're going to be able to push through that 25-day moving average and come back to these highs, right? Now, if we don't have enough volume, what's going to happen? We're going to run into this purple line, this 25-day moving average, and we're not going to be able to break through it. That's kind of what we're seeing right now. So we do have the trend working in our favor, but we don't really have the volume working in our favor right now. Can that change? 100%. That can change this afternoon. That's why you need to put it on your watch list and pay attention to it. Now, the third part, let's say that we're in the sweet spot. Check. Let's say that we have great volume. Check. Now, what do we look for? We look for a buy signal or an engulfing candlestick. If we just zoom in here to Disney today, this is actually a really nice engulfing candlestick. If I just turn these off, I turned off my moving averages. Look at this. We have a really nice candle today that is engulfing. It's higher than the previous high of the day. This was the high of the day yesterday. And it basically takes out the entire thing. It's big, it's thick, it doesn't have any wicks on it. These little guys are wicks, doesn't have any of that. That's great. But it takes all 3 put together. Today is July 17th. It's about 9:48 in the morning. I want everybody to go back and look at this chart as the days come on. This video is not going to be posted today, but I want you to go back and see what this July 17th candle did. I bet you that it looks something like this by the end of the day. Something like this by the end of the day. Why am I saying that? And we'll see if it becomes true. It's because there is not volume there. It's hard for a candle to keep an engulfing candlestick like this and be a full body without having good volume coming into the stock. Now, if the volume changes and we end up here at the end of the day, then this doesn't mean anything anymore. But if we finish with volume down here, this is going to pull back. It's going to be exactly what I drew right here. Why am I telling you that? Because it takes all 3. Just because you have an engulfing candlestick does not mean go and buy the stock because you're buying on low volume. What does this mean? Well, let's say that you have 100 shares that can be bought during a day, right? And during that day, 20 shares are bought or sold, but they're all buyers. So you have 20 out of 100 shares that are all bought, no sellers whatsoever. What's going to happen to that stock price? Well, the stock price is going to go up. Because remember, this is a market. There's a push and pull going on. That's why stocks fluctuate like this. Some people are buying, some people are selling. If you don't have a push and pull, what's going to happen? It's just going to go. Conversely, if it's just selling, it's just going to go down. That's why you need to pay attention to the volume. That's why I say, what's going to happen here? People are buying right now at about 9:50 in the morning. At some point today, this is going to drop down. Why? Because those buyers are going to sell, and there's going to be nobody buying, and there's going to be no pushing and pulling. So today is going to be a day where you have the stock price go up, and then the stock price come right back down and finish with that candle. That's why you need all 3. You need Yes, you need an engulfing candle, but you also need good volume and you also need your trend to be in the sweet spot. There's more to this, but if you can grasp those three foundational things, you are going to do very well over a long period of time. So let's go back to a trade that I just made last week. This was Lululemon. Lululemon was a trade that I just made last week, or 2 weeks ago, I should say. So as Lululemon, let's pull up our moving averages here. As Lululemon was moving up, what was I doing? I was saying, okay, well, this thing has just been battered and abused over several weeks. And I looked at it as an opportunity to get into the stock going long, running it back to this 25-day moving average, this purple line. So if we come here and we say, all right, let's look at those three things. Number one, we waited for it to get in the sweet spot. Let's get the crosshairs up there so you can draw the parallel line, the perpendicular line, the vertical line up and down through the candle. So here's the candle that I bought on. Now let's go back and go through the three steps. Number one, here was our candle right here. We had good volume, check. Were we in the sweet spot here? Yes, check. Did we have an engulfing candlestick? Look at this candle right here. Did we have an engulfing candlestick? No, did not make the purchase. This is patience. You have to be patient here. Just because you have volume, just because you have a stock price going up in the morning doesn't mean you go and buy it. Day two, were we in the sweet spot? Of course we were, yes. Did we have volume? It was okay. We almost got to average. Did we have an engulfing candlestick? No, did not make the purchase. Day three, were we in the sweet spot? Yes. Did we have volume? Yes, you touched average volume. Did we have an engulfing candlestick? Yes, we had an engulfing candlestick. Therefore, this is where I made my purchase. All three of these things, 1, 2, and 3, set up for me. And then I just waited until the stochastic got to the top, started to roll over, exited here. It was only a 2% gain, but 2% in 2 days, that's pretty good. If you can do 2% every 2 days, you're going to do very, very well by the end of the year. Admittedly, this is one of the lower return trades that I've had this year. I was really hoping that we can get up here to the 25-day moving average and I could probably squeeze out 5, maybe 6%, depending on whatever that number was, but it didn't happen. And it's important that you see that it didn't happen. You go in there with a plan, but you have to be able to adapt. So looking at this saying, oh yeah, I hope to get 6%, but the chart told me right here, we started to get this rollover. Look, it's the highest probability to make money through the sweet spot, right? Well, at some point, that's not the thing anymore. We got to turn down. You have to figure out when to sell. I have plenty of videos made on when to sell. But the point in me saying this is you have to be able to adapt. You do what the chart gives you. You do what the chart gives you. That's how you're going to keep money in your pocket. So yes, it was only 2%, but 2% in 2 days and not to lose. If I hung in this, I would have lost money on this thing. The chart told me exactly what to do. It told me exactly when to enter, told me exactly when to exit. Now let's talk about how people lose money here and why. I'm just going to say YouTube trading, or there's so many different platforms out there that people will go to and say, oh, well, I tried trading and it doesn't work. Well, because if you look at this day right here, the second day, you had good volume. Absolutely. You had a nice run up in the stock and it probably got here. And these people right here that didn't sell and it pulled all the way back down, you can see it closed the day right here. They said, well, it got to what's this price? 252.24. That means that it's probably going to get there again. Well, here it didn't. This is the day that I exited because I realized it wasn't going to get there based on the stochastic. I do think that a lot of people stay in these stocks because they say, well, it's going to get to the 25-day moving average. And why is it going to get higher than 252.24? Because it was already higher than 252.24. Therefore, it's going to happen. Sorry, that's not how this works. That's why people lose money. I guarantee that there are still people in this stock that are trying to make money back that bought on this day. Not in my community, but elsewhere. Why? Because they think it can get back to 252.24. It's not going to happen, especially now. Look where the moving average is now, 235.96. You're not going to break above that 25-day moving average unless you get a giant influx of volume. That's not going to happen with Lululemon right now. I can promise you that. Not in the immediate future. This is why people lose a lot of money and blow up their accounts and say trading doesn't work. So earlier in the video, I talked about how trading can be a very lonely road, and it absolutely can, especially if you go and find the wrong place to learn trading, and then you're like, okay, I'm up a creek without a paddle right now. Well, here's the paddle for you. We have a lot of paddles in this boat, and we're all rowing in the same direction. This actually works. This does work. I promise you it does work if you stick to it, if you do it the correct way and don't cut corners. I've had multiple messages this week on Patreon, and it's total coincidence that I'm making this video, that have basically said, I thought trading didn't work. I learned it from other places, and here I am, and wow, this actually works. And also, here's the difference. I don't really need to do this. I just enjoy teaching. Do I make some money from it? Yeah, I make some money from it, but this is more about connecting with people and teaching them to do it. I used to go to high schools and teach this for free. I don't need the money. I have another career that I do, and I invest on the side. This is strictly for you. We have a Patreon community. The link is in the description below. There are so many people out there, some that have been doing this for one day, some that have been doing this for 5, 6, 7 years. It's a great place to be. It's a great place to find stocks. It's a great place to ask questions. Just try it out for a month. Try it out for 2 months. What do you have to lose? It's really not that much. And you're going to get so much other information in there. Now, I made a full course. There's more to this. This is the core of it. But I made a full course that goes into the details of trading. It's about 2.5 hours long. It's chaptered. It's something that you can go back to on a very consistent basis. You need to watch it next if you want to take this journey. Click this video right here. Go check it out.